So welcome, everyone. My name is Simon Toms. I'm the co-head of FinTech at Skadden, and very pleased to be accompanied today by an esteemed panelists here to discuss the exciting topic of striking the right balance between effective regulation and then growth and competitiveness, and how do we get that balance right? Mainly, I think, from our panelists who are here to focus on the growth and competitiveness, but we also have Colin from the FCA to keep us honest on the regulation. So I'm going to start by asking each of our panelists to introduce themselves to you so that you could get part of their background, and then we'll jump into the discussion.
Hi, hello, my name is Doris Honold. I'm a financial services executive or former financial services executive, and I'm now on a few financial services board, and I'm here as a representative of Encompass, which is a KYC automation platform.
Hi, I'm Cordelia, Kafetz, Director of Financial Risk at Starling Bank. And before I joined Starling, I was at the PRA regulating banks and building societies, and at the Bank of England designing regulation to enhance competition in banking and payments. For those of you that don't know Starling, we are the first UK digital bank to be founded by a woman. We've got 4.5 million customers, including 500,000 business accounts, and we've also got Engine that takes the tech underlying Starling Bank and kind of selling that to clients overseas to help them start their own digital bank.
I'm Colin Payne. I'm the Head of Innovation at the FCA. I did the opposite journey, so I was a deliverer for 20 years in FinTech, and I've now joined the FCA, leading obviously the best team on the planet, doing innovation for the UK and in London.
My name is Sara-Louise. I head up the business development team at Aquis Stock Exchange. Aquis Stock Exchange is the new kid on the block in terms of exchanges. We've only been created since 2020, and we focus very much on supporting and nurturing younger businesses through their public market journey. Aquis Stock Exchange is part of Aquis Group, which is a technology group. We also have a trading platform where we trade around 6,500 stocks across 16 markets in Europe. And we also have a technology division where we create and license cutting-edge technology services to support other growing exchanges globally.
So Ryan Mendy from a company called Zilch, which a few people would have heard of. So I'm the CCO, the Chief Communications Officer, been with the business since the beginning, and original role raising money, and then transitioned into making sure everyone understands one thing, and that's if you're going to have a hyper-scaling business, especially in the UK, you're going to need probably equal, if not greater, reputation to guardrail that and people to understand what you're doing. So for those the unaccommodated, we've taken a company in 5 years to now become the fastest growing company, the fastest growing unicorn in the UK. 5 million customers, about 4 billion in sales, and around $200 million in revenue run rate, and now broken into profitability. And the overriding message is that we've created effectively like the world's first debit and credit card on Apple Pay, Samsung, Google Pay, and it's used by roughly 5 million customers in the UK. They're using it daily, and we're getting, so what we really are is a data company. And it's that data that we're now looking to work with the FCA and work with the regulators to make sure that we can bring a product like ours, which is ultimately to eliminate the high cost of consumer credit, to the underserved market, the 90%, not the 10%, as in some of us who know how to use credit.
Great. So I thought we'd start actually by looking at where we are currently on the state of regulation. Maybe Cordelia, some thoughts. You're operating as a challenger bank in the market. Where do you think sort of regulation currently sits, and the challenges that you face with the current regulatory framework?
Yeah, thanks. I think you kind of have to look at like the different stages of a company. And I think in terms of startup, I think what the UK has done in terms of putting in place kind of the right conditions for financial services firms to start up has been excellent and global leading. It's been 10 years since the PRA got its secondary competition objective. It's been over 10 years since they lowered barriers to entries for new banks, and there's been 40 new banks in the UK in that time. That compares with 1 in the previous 100 years. And it's been 10 years since the innovation team was set up at the FCA, and the launch of the sandbox. Thousands of firms have been through that. And again, countries across the world has copied what the FCA has done in that area. And those firms are having an impact. challenger and specialist banks now lend to SMEs more than the incumbents do. Starling Bank alone has 9% share of the SME market. I don't think the big banks would have done what they've done to up their game on terms of their apps, their mobile banking apps, making it easy for consumers to make transactions if it wasn't for the challengers hot on their tails. However, none of those firms have become kind of what I would call systemic. None of those firms are truly competing with the big incumbents. And we've seen firms that want to grow from that kind of startup to scale up to systemic consolidate. You know, we've seen Virgin and Clydesdale, and then that group then consolidated with Nationwide. We've seen Coventry and the Co-op. But firms want to be able to grow and scale without consolidation. And I think that's where the focus needs to be now. The focus needs to be from the regulators on done an absolutely brilliant job on the startup community, but what can we do on scale up? Where are there barriers? And there are. That on that squeezed middle that essentially have to comply with the same regulations as the largest systemic firms, but have only been around for a few years to do so. And how can the shift now focus on that kind of scale-up area?
Thanks, and at least some positive news there in terms of the current framework. Doris, do you share that sort of view on current framework, or is there more that could be done with the current challenges the regulatory framework provides?
No, I mean, I agree with everything Cordelia laid out so beautifully, actually, and I think she raised a very important point with how can regulation be more flexible or more appropriate to the organization. I have dealt with a lot of smaller companies, with FinTechs, and they are suffering from, or not suffering, but it's very hard to compete given, no matter how small your bank is, you are a bank, and therefore you have to apply to all regulation, and that is right in a way. But I think a little bit more stepping back and reflection and what is the main goal? The main goal is to have a healthy financial services industry, and then really think about the big things first. What are the real knockouts we need to avoid, and more focused on that. I've been at large banks all my career, and also there, the regulatory burden is not to be underestimated, and it's not the 80% compliance, the big things, but the amount of work that goes into all the regulatory reporting, all the details on things that need to be right, but I think a little bit more flexibility on getting the big things right is a lot more important. I mean, if you look at the banks that failed in the financial crisis, it's not because minutiae regulatory report wasn't okay. And then the last thing I'd like to make is also, and Colin and I discussed that in our pre-call, I do see a lot of organizations still addressing weaknesses with human resources instead of going for FinTech solutions like Encompass on KYC, and an indication from the regulator that there's a preference for a proven technology solution versus just throwing people at it would also help the FinTech industry.
Thanks, Doris. And I think we see the same thing with companies having to comply with the whole handbook or all of the rules, and not necessarily easy at the earlier stages as they're scaling up. Colin, not to beat up on the regulator, what do you think the current status is at the FCA? How are you feeling? Lots of positive noises coming out about change and innovation, but it'd be great to hear your views on the current state of affairs.
Yeah, I mean, I'll start by just pointing out we've got a 5-year strategy which came out this month. It's the first time we've had a 5-year. We had a 3-year, and before that, going back a few years, it was 1 year at a time. So being able to plan out and simplify the messaging out to the industry, I think is incredibly important. I'm pretty delighted because on every page innovation is mentioned, growth is mentioned, technology is mentioned. There's no question that it's one of our most important of our 4 pillars. Of course, we still have the same objectives of the consumer, the care for the consumer, of course we do, but we're recognizing that we need to innovate faster. more effectively with industry. Of course, my team have done that for some years, as Cordelia mentioned out. And we're going to take that further and faster over the coming months, which I'm delighted about. The FCA itself is looking at risk. It's a wider issue than just the FCA, of course. Looking at risk appetite requires everyone to agree on that, from government through. So I think establishing clarity around that for industry is important. But we've also got really interesting departmental and FCA initiatives. For example, I'll just give one example because it brings it to life. We did an advice guidance boundary review policy sprint this month. It's been the culmination of 6 weeks' work. It's a brilliant example of taking a sprint mentality and bringing it to policy. So it's the first time we've done an agile policy sprint, and you'll expect to have some communication around that in June. So for 2-month turnaround, from going from sprint and experimentation, and I heard the last panel talk about getting to real outcomes from experiments, learning from them and applying them. That's probably the change. That's the big change. I'm quite excited about it because it brings those parts of the FCA together that are really important to speak in a much more fluid and fast way.
Great, sounds like an inflection point coming from Stratford. So Ryan, looking at the sort of balance between regulation and growth, what do you think could change to encourage Colin to use innovation technology more in the 5-year plan to help companies scale and grow and be more competitive on the global stage?
I think I'd just say, firstly, behind the scenes, I've got to really understand the government. Behind the ministers, what you don't see is they're holding the microphone, and they're the talented ones that stood up the soapbox and get us all to vote for them. And they're talented in themselves, but behind that, you have this enormous weapon called the civil service. And it's broken down into multiple departments, but then H&T, you've got DBT, and they look after ultimately when you consider like the LSEG, the HMRC, and so on and so forth, and of course the FCA. So I think what we've got some really great news. We've got someone who's may have gone into a consideration of a big change, and that's Nick Hill. So I'm one of the founding co-chairs of the Unicorn Council, which is effectively 25 CEOs of the highest growing companies in the UK, the FinTechs, FinTech Week, etc. You can imagine. So we sat down with Nick Hill and Colin this morning to have a breakfast before we all opened up. And it's just like the innovation sandbox is a world first, this is a world first. And because what we're basically trying to do is remove that black hole of policy engagement. We run businesses. So back at the ranch, it's really busy. If we're growing at 100% year on year, one thing comes into mind: talent. Now, you can have experience, but if you also got the talent around you, and you need that fine blend. So what we've found with the FCA is we, one of the cohort 5, we came out of before we even launched our product, we got regulated. And so what we are now today is one of the fastest companies to come out of that space, probably the only $1 billion private company to come out of that outside of a bank. We haven't even got a banking license. So what I'm really excited about, and what I'm really optimistic about, is when you take a look at Nick Hill's tenure. He's been there 4 years, and now he's in there. And think who he jumped on the back of, which was Chris Woolard, who I was just talking to upstairs, who wrote that report. Now, I think it's probably the largest, most exciting time we've got to basically get stuff done. I can insert another word there now. But the reality is like, look at the two, paradigm shifts we've got of rows. We've got a government that's come in, growth is the agenda. And I think that one definitely got the message across last year. So growth is the agenda. But guess what? Now you've got a regulator who's been asked to speed up. But guess who's taken on the reins? Someone else who's just got another 4 years. So our over-ambition is if you take a look at one of the first products of this millennia, which was, I don't know if everyone's as old as me, but like the iPod, 1,000 songs in one hand. Well, did you know? It's an interesting story. They announced they wanted to do it in January 2001. In March 2001, they hired their first employee for it to run it, and they launched it in November 2001. So that's 9 months. It's almost like as fast as it is to bring a baby in town. And this is what we actually need to consider. Technology will always outpace regulation. There is absolutely no way it can keep up. It's like telling your child how its life is going to be. And this is the reality. So now what I'm really excited about is now we're sitting down, we're engaging, and we're telling them what we need. And they're saying, here's what our challenge is to understand. So I'll just override and you just say, for instance, why is it we all enjoy hospitality, right? When you go to that restaurant and you walk up and they give you the smile and they're like, oh, listen, there's the table. They recognize you. So with the FCA, if you want to put an application in, why do you got to sit at the back of the 47,000 queue? If you're at scale and you're using all of the accredited, all the verified PwCs, etc., you're trying to grow at 100%. Not like one of the FTSE 100 companies that are growing on average single digit. So it's really tough back at the ranch. So what we need is we need a regulator and a government that actually understands that we need policy that's actually going to clear the road, but design the road. So what we can do is we can go as fast as we need to do because we create the jobs.
It sounds like greater partnership and more dialogue, which sounds like it's already happening over your breakfast. But
you've got great
keep
people like
talking.
Colin coming on board and Hugh's in the audience as well, and I can see a few familiar faces. This is why this week's so great, because you've got all the people together.
Yeah. So Sara-Louise, just in terms of the regulation itself, trying to catch up with the technology, what do you think could be done to help companies scale more specifically so they either attract more capital, grow faster, roll out products more quickly? What's your view on that?
So I think there's quite a few things that can be done. Kind of right-size regulation, proportionate regulation. I don't think the one-size-fits-all approach works anymore. And I think Cordelia is really right when she says that we're really good at startup capital, but we're not so good at scale-up, and I think that's where the gap is. So certainly on our market, we have two segments. So we can cater for earlier stage businesses, and they have different rules. There's a different rule book that apply to them. So we give them a slightly easier, more flexible experience to reflect the stage of development that they're at, and then we nurture them. We create a supportive environment in which they can grow, access further sums of capital in follow-on fundraisers, and then we have a more established segment of the growth market where we bring in more regulation because they are more established businesses and they can take it at that stage. So I think regulation can certainly help in that way to facilitate more companies using the public markets, which I think for early stage companies, it's not actually on their horizon at the moment. They think it's in the sort of too hard bucket, and we need to facilitate that. We need to make that more attainable for them, because public markets are obviously a fantastic way to raise profile, to make acquisitions, to elevate your your status in terms of your credibility if you're looking for government and global contracts and what have you, and also just to be able to raise money from a wider variety of funds, high net worth family offices and what have you. So I think, also we need to get more pension fund in. We had the Mansion House Compact and we need to see that come through. So that's at a very low level at the moment compared to, not so long ago. And I think we need to empower the people. So regulation goes alongside education, new products, innovation around the ISAs that there are available, and getting some of that 1.8 trillion that's currently sitting in savings accounts, not really working very hard, to educate people to help that work harder for them. And obviously then the results of that are more growth, more innovation, keeping companies here.
Yes, I guess using regulation to unlock some of the opportunities. Colin, what's your thoughts on variable rule book for the size of a financial institution? Because again, something we sort of hear from clients we work with, but it's not been the historic approach. It's been more one size fits all.
Yeah, I mean, I think actually it's a broader context. I will get to that, but picking up on a couple of things. I mean, it's really about scaling up and hypergrowth, and even global championing. So I think something we've spoken about is preserving the great work we do on startup and early scale up, but actually now focusing a lot more on how we help the unicorns, and those who are going into sort of hypergrowth and want to go abroad. That requires us to work in innovation in a slightly different way. So I think to your point, it's kind of more like the Khalifa review talked about the scale box mentality.
Exactly.
And I think that's what you'll probably be seeing from us as we develop. But in terms of the rule book, I think we've got some practical things that we're looking at doing there, simplifying, streamlining, because it should be easier, machine readability, all those kind of things that allow you to consume it in different ways. But ultimately, we've got a threshold that we have to maintain. But I think working with industry is the only way we can inform ourselves of whether that's appropriate or not. So that proportionality is really important to feed back on. And I guess we talk about the work we do. I loved your last point about education, because for what we're trying to do is really clarify things. A lot of it isn't about necessarily regulation, like AI, for example. It's not about new regulation. It's about clarity and it's about regulatory comfort for what you're doing. So you come to our sandbox to get that regulatory comfort. And I think that really gives you the clarity you need to then go into the market and to extend and expand.
And Cordelia, maybe some thoughts from you on what could be done beyond the sandbox. So we see companies get to the sandbox, they're trying to come out of it, there's a bit of a cliff edge. What else could Colin and team do to sort of help companies with guidance, clarification, softer comfort that's maybe not the rule book, but something that gets them more comfortable, they can grow in a safe way?
Yeah, I think there's a few things. I mean, I think the first actually is certainty. Like when you come out of that sandbox, or as you're scaling up, what is the regulatory regime? And I think reviewing regulations is really good and really key and really needed, but just like finding a way, and I know it can be really hard because you have to consult and often you need to put legislation in place, but just to try and do it more nimbly. So if I think on the prudential side, like the Basel Committee, so the global standard setter, finished coming up with its rules on capital requirements in 2020. They might, but it's not 100% clear yet, be implemented in the UK in 2027. I've been at Starling for 4 years, and I don't think I've ever gone to the board and said, like, this is what the capital regime definitely is for our 5-year plan. It's like, it could be this, or it could be this, or it could be this. And like, I've never been able to say that in 4 years. So I think trying to do things more nimbly, I do understand the constraints and certainty. I think the second thing is that consultation thing that you mentioned. And a unicorn council is a brilliant idea, but actually, we shouldn't, as industry, have to kind of set up these kind of, grand groups of people to come together and to bring together the regulators. It's great that you're doing that, but we shouldn't have to. There should be a lot more consultation with the policymakers within the regulators and industry on a much more kind of continuous, ongoing basis. So before they even do the formal consultation, they understand the pain points from the industry. And the industry's not there to kind of massively water down regulation. It's there to say that this is where we need clarity, because a strong regulated market is good for investment. So more consultation, kind of pre-consultation, and also learn just like practically how to design stuff so it's implementable. There's some really good work going on that. The AI forum that the FCA and the Bank of England have set up with industry is a really good example of that, but that's more the exception than the norm. And then just, sorry, one final thing is just coherence. There's over 50 thresholds of regulation that banks have to comply with. Looking at that holistically and coherently rather than regulation being developed kind of topic by topic is kind of the third area. So yeah, certainty, consistency, and consultation.
Thanks, Cordelia. Actually, I was going to ask our panelists for a final thought on what they might change in regulation to promote growth, but I think, Cordelia, you've had 3, so I'm going to ask Doris for her 1, and then go down the rest of the panel.
I think the one is very hard to follow, but it's really, recognizing that the goals of the industry and the goals of the regulator are the same. We want to save financial industry, and as a consequence of that follows collaboration, working together, and really have an open exchange with trust. And I think a lot of it will follow from that.
Colin?
I couldn't agree more. I'm quite new to the FCA. I have a slightly different approach, perhaps, and I'm very transparent and connected to this community, having been a practitioner in this community for some years. And I'm really glad that I can bring a team into that and just accelerate that kind of process of building trust and speaking about the new ideas that we can all do together. I think it's a great idea.
Quickly, Sara-Louise, before we boot it off the stage.
Very quick, yeah, we've run out of time, haven't we? I think we need to build pathways and not walls. So we need to streamline the listing process. We need to get more access to capital for companies. And we just need to create, an easier and a better environment in which they can grow and grow here, keep them here.
Great, and Ryan, maybe a final thought.
I think I've always grown up on a premise which is something my father shared with me, which was to get something you've never had, you need to do things you've never done. There's only one problem. I was 12 when he told me that. But that's what's happened to a diplomat for a dad. But listen, I think there's probably 3 things. One is we need regulations which attract risk takers. Again, risk takers create the jobs. And then we need to keep them here with incentives that make sure that, like in Silicon Valley, you don't go to any evening drinks where the person hasn't just sold something and now he's setting something up, you know, or she's doing something next. And that's the thing there. So you need those two things sorted. Regulation short term, tax incentives long term, because you can figure out ramifications. Thirdly, North Star. Our one message is very simple. How do we grow the FTSE 100 2 times in the next 5 years? I'll tell you how you do that. Create the policies that are going to attract just for a start, the Unicorn Council. This is just like, this country is a breeder of unicorn, right? So there's over 180 billion plus companies, billion-pound companies that have been created in this country. Right now, there's just over 20 FinTech companies. That's just the FinTechs. What about the farmers and the bios and et cetera, right? Have them stay here, don't leave here. And if we have the regulations and the incentives to keep them here, well, then we can unlock that 50 billion, which is only 1% of all the DC money anyway, flow into the UK, bring back that hundreds of billions that are overseas back here. And then what we'll find is that you'll see that's how the FTSE 100 will inflate. It's only a $2.5 trillion market, pretty much the same size as our GDP.
Good ambition, Ryan, but we're being scoured out by the stage on the right. So we're going to need to wrap up our conversation. There's far too much to talk about on this topic in the time we have. So I'd like to come together and thank our panelists for a very interesting discussion. Thank you all. Thanks very much.
Thank you.